door when the stocks are high. You got to remember, this is important. The most negatively correlated asset to gold is the stock market. So if the stock market's making new highs, doesn't mean gold should be making new lows, but it does imply that gold shouldn't be doing as well as it is. So if gold is doing this well in a stock market that's also doing well, it's indicating to me with all my years of study that we're really going to see something on the next major leg up, because gold is forecasting, markets look to the future, that there's a lot that's going to take place in the next, I would say, few years regarding the precious metals.
As of Monday's early European session, gold continued to hover near record levels, maintaining its position above the $2,500 mark. This strength in the gold market comes amid a shifting landscape in precious metals, with both institutional and retail investors showing renewed interest. DavidMorgan, a renowned precious metals analyst often called the silver guru, offers insights into the current market dynamics. According to Morgan, gold has been testing new highs for near-term contracts, particularly in the futures market. This bullish trend is further evidenced by the gold-silver ratio, which has reached an unexpected high of 87, indicating gold's outperformance relative to silver. Despite gold's impressive run, Morgan sees a potentially more bullish setup for silver. While experiencing some choppiness, the silver market has broken above the crucial $28.50 level and is now testing the $29 region. Technical indicators, such as the 50-day Exponential Moving Average, are being closely watched by traders for signs of further upward momentum. A key driver behind the strength in precious metals has been unprecedented central bank buying. According to data from the World Gold Council, Morgan notes that central bank gold purchases have reached 50-year highs. This trend is particularly pronounced in China, where gold imports are likely being underreported as the nation continues to build its stockpile. The World Gold Council reports that official gold holdings totaled 36,089 metric tons as of May 2024, representing a significant portion of the estimated 212,582 metric tons of gold mined throughout history. This accumulation by central banks underscores the growing importance of gold in the global financial system. Please tune in for our exploration of DavidMorgan's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Been far from perfect, but I've been, fairly accurate over the years. I mean, I put my calls against anyone. And I said a few months ago that, once the summer hit, I saw a trading range, which is really what we've been in. I also said that August is seasonality-wise the low for gold or silver or both, usually, not every time. I didn't expect a lot of new buying, a lot of talk about the gold and silver markets, really, and that's kind of what we've had. Gold's been, knocking the door on hitting new highs. If you go in the futures market, you claim, in the near months, it's making a new high, which it is on paper. Nothing unexpected for me other than the gold silver ratio. Once, silver made it above 30, I didn't really expect it to stay there, but it did a pretty good job of staying there for a while. But when it started to come down and the trading ranges were established, I really thought that gold silver ratio would hang around 80. And it's been as high as 87 recently. So certainly gold is performing better than silver at this point in time, and continues through the summer. Yet the setup in silver right now looks much more bullish than bearish. And this sounds real trite, but it's true, and that's any market moves on buying pressure or selling pressure. And of course, when you're talking about a commodity, unfortunately, that usually has to do with the amount of derivatives. How many paper contracts are bought, either in the COMEX or in London or in the over-the-counter market, because they also exist in an opaque manner that the public doesn't really get to see, because you can do an exchange, on a contract, bank to bank or bullion bank to hedge fund, for example. So there's a lot of, paper out there. So it's really difficult. But the bottom line is physical markets really do have the ultimate say in where these market prices go. And yet the derivatives market sets the price. So the reason I think gold's so strong is you've seen central bank buying over the last couple of years. It's been, according to the World Gold Council, the highest it's been in probably 50 years. You see China probably underreports the amount of gold that they're, importing, day after day, week after week. month after month and year after year. They just keep building their stockpile of gold. None of the gold mined in China ever leaves. It's against the law to export any of their own mined gold. And the awareness in the financial system, where we're starting to see a shift in who's buying gold. Not the central banks, that's been ongoing for a few years, but the wealth management types.
As we approach the Democratic National Convention in Chicago, the financial landscape shows signs of change. Wall Street economists are anticipating a shift in Federal Reserve policy, with many expecting the central bank to begin lowering interest rates before the end of the year. Despite recent market volatility and concerns about a potential U.S. recession, a Reuters poll indicates that most economists don't foresee an economic downturn. Instead, they predict the Fed will implement modest rate cuts of 0.25 percentage points at each of its remaining meetings in 2024. This outlook has been bolstered by regional Federal Reserve Bank presidents, who hinted at a growing willingness to start easing monetary policy to alleviate the burden of high borrowing costs on consumers and businesses. In this context, DavidMorgan's insights on the gold market become particularly relevant. Morgan, a seasoned precious metals analyst, points out that financial markets are inherently forward-looking. He suggests that the gold market has likely already factored in the expectation of interest rate cuts. As a result, Morgan believes that when the first rate cut occurs, possibly as soon as September, gold prices may not respond with an immediate rally. Let's get back to the interview.
I've learned many things the hard way, and it's probability. I mean, it's not like 100%, but one of the things that I learned fairly early was that markets look forward. They see the future. And so I think the first, rate cut that we're going to see after some time, maybe in September, probably likely in September, I think gold will ignore it. And I think gold may go down on that day because I think gold's already anticipated. There's many that will go the other way, but I remember one time, trading gold. I used to trade futures quite a bit. I don't do that too much anymore, but I was long gold, and there was some, war thing going on. This is, 25 years ago or whatever. And yet gold went down, and I called my account manager or my broker, and I said, "What's going on? I mean, this should be positive to gold." And kind of explained to me what I just said. The markets anticipate gold saw it coming, and people are selling into the rally or selling it off. So that's my take. I mean, but longer term, the monetary crisis continues, and the other asset classes are, doing well today, may do well to the end of the year. I don't know, but the real facts are what we talked about. I won't repeat too much, but the amount of insiders that have sold stocks, the amount of problems in the real estate market, big people that are moving from those two realms into gold, not so much for price appreciation, but for price stability or for wealth preservation. And that's what gold exists for. I mean, it's really not going to make you wealthy, except in rare occasions. I mean, when there's really a wealth disparity on the price of gold. Now, I'm going to move on from there real quickly, but I wrote an article, one of the guys I work with, that they bought out the Lemuria royalty company I started many years ago. We merged with them, and he's asking me something about the price of gold. And I said, well, read an article I wrote about 25 years ago called Engineering the Price of Gold. I mean, it's how much gold do you have versus how much paper do you have? It's the paper price of gold. And you did that in 2000, about 25 years ago. The price was $2,500 an ounce. Well, James Rickards just did that same basic math a couple months ago, and the price was $27,000. So that shows you how much paper printing has gone on between the year 2000 and the year 2024. The supply of gold really hasn't changed very much, changed slightly, but the amount of paper has been astronomically increased. So it's a moving target. I mean, the one thing I don't think the public understands is the price of gold going higher doesn't mean that gold's really gaining in value. It's maintaining purchasing power. The dollar's being destroyed. That's what they don't understand. But if you live in India, you understand it. If you live in Argentina, you understand it. If you live in almost any South American country, you understand that. It's like a basic thing that you probably know when you're a 6-year-old kid, because these governments always destroy the currencies, and they do it fast enough where you can see it. Whereas the United States, having the reserve currency status, has done it slowly enough over time that the boiling frog it's boiling now, and it's a little bit late to be jumping out of the pot.
As geopolitical uncertainties persist and concerns about currency devaluation linger, the precious metals market appears poised for continued strength. Investors and analysts will closely monitor these trends as gold and silver continue attracting attention as value stores in an increasingly complex global economic landscape. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.